Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Landon Swan, co-founder at LikeFolio. Welcome back to the show, Landon.
Thanks. Great to be here.
Good to have you. We're talking Starbucks. Now, this stock has been languishing. It was down about 5% last year. Got a nice pop from the new CEO, Brian Niccol, coming in there. But do you guys have any data that backs up maybe the fact that, hey, it's rallied the past couple sessions, but I mean, it's still a dog over the last couple of years, right?
Right, it is. I can support the dog stuff. That's pretty easy for us data-wise. And as far as the rally goes, the last little bit, I mean, it's all about the CEO. That's it. I mean, if you look at what Chipotle did under him, it was basically 5x in, 5 or 6 years. Absolutely incredible. I'd bet on that jockey all day. That's amazing. But, he's coming into a tough spot right now. I mean, Starbucks last quarter, their revenue was down 3.2% year over year. We've seen them have a happiness drop on our data, less engagement across the board with our data. A lot of it, I think, is, there's actually a lot of different reasons. One of them is people feel the menu is too complicated. Starbucks itself calculated that there's about 170,000 different drink combinations that you could order. Users on, Reddit and things like that, their math says the number's higher than that, but it's at least 170,000, which is nuts, right? I mean, I get it. I understand how permutations work, but still, that's a big number. They've also gotten, anytime they're in the news, it seems like it's for a negative reason, like political reasons or other things. They get the homeless bathroom stuff, the labor shortages, the strikes, the Israeli conflict, and that whole thing. Like, it's never positive news with Starbucks. It's always negative. And I think that they've moved away from customer experience and more into a, transactional view of the business. And it kind of shows. I mean, it used to be this place that you would go and have a good feeling, and it's, warm and inviting, and it's, they write your name on the cup with the Sharpie, and they got away from that. They did all kinds of stuff, right? It's just they've moved away from what they were, and they got into this number grind kind of company. And people feel that. I mean, they feel that they start going other places, and we're seeing that. We're seeing the competition is really starting to win. I mean, if you look at Luckin Coffee in China, they've overtaken Starbucks as the number one in the number of stores. They did that 2 years ago. They've overtaken them as the number of sales or revenue. They did that last year, and now they've got their eye on the U.S. They're serving coffee for $2 to $3 a cup. I mean, it's a big difference than what you get at Starbucks. And then you got Dutch Brothers, which is actually another one that, we recommended to our clients about 6 months ago. We're up 50% on that. Bros is the ticker, BROS. They've got a simple menu. It's basically drive-through or walk-up only. It's very simple. It's just get you what you want and get you on your way. And so you can see here the I guess brand interest is kind of how we measure, how we look at website visits, and this is what you see, the big divergence between these two. One, both about 20%. One's going the right way, the other one's going the wrong way. So that's, obviously it's very concerning. The stock's really not done much over the last year, but, and this is what everyone is looking at, is the new CEO. Like, can he turn this around? And he's talked about making it, simpler, faster, more welcoming. He talked about the Sharpies on the cups instead of printed labels, which I think people enjoy, and really just, making it more about customer experience rather than transactions. So I think that is where they need to go. And if you're betting on Starbucks at this point, you're betting on the CEO. That's it. That's the only reason you'd bet on them, because you take him out of the equation, and this is all the data looks pretty poor. But where they're at now, and rewind back to 2018 and look at the Chipotle chart. I mean, that'll give you some hope for Starbucks. So at this point, the LikeFolio data, if we had blinders on, we didn't know there's a new CEO, we'd say, now this is a dog company. Stay away from it. It's not even a value play here. It doesn't look good. With that information, do you want to bet on the man or not? I mean, in the past, I've had a lot of success betting on jockeys before instead of companies. So maybe this is the right jockey to bet on. But right now, the company really needs a turnaround.
Yeah, the bad news is, Landon, fourth quarter, U.S. sales down 6%, China down 14%. You think he's got a big problem in the U.S.? He's got a bigger problem in China. But, and this is a big but, he fixed Taco Bell, he fixed Chipotle, and you could say, well, this is not a fast food company. Yes, it is. It's fast. and you're getting things. It's really all the same. Now, he's got a price problem. He's got an image problem. There's a lot of things, but you're right. This is the guy who's known as the fixer, and this is just his next product. And you look at guys like this, and you know what? You have this feeling he's going to figure it out. It may take a while. It may be very short, but the stock, interesting enough, 6 months up 29%, 3 years down 19%. So it can still rally, but you're right. A lot of this stock movement has been betting on the new CEO. And why? Because he's got a track record, as you know.
Right. I mean, you get into political discussions online, and people always, they compare how much CEOs make and how much the average worker makes and all this. And at some point, you got to point to a guy like this and be like, he's worth it, right?
Yeah.
I mean, he gets the job done. Ask the shareholders if they're willing to pay him what he's paid. They'd probably say double it. Pay him more if he can do more than that. So absolutely. And look, to get back to some of the data here, this is the app engagement on Starbucks, going the wrong way. I mean, we looked at the website data, and that's down 20% year over year. The app engagement's down 5% year over year. So it's not like people aren't going to the website; they're going to the app instead. No, they're moving away from both. And it's just an overall trend that we see in the data when it comes to mentions, website data, app usage, happiness. All of it is going in the wrong direction. And you can see how important the app is to them. I mean, they still got, 38% of people don't use the app, but a lot of people are really dependent on it. And yet that number is decreasing on a year-over-year basis. So app is key for them, and it's decreasing. That's not good. Web's decreasing. That's not good. Mentions decreasing. Happiness decreasing. All of it is going in the wrong direction. But all of this has a giant asterisk next to it that says we've got a guy who has turned around two companies tremendously, and now he's got his eyes set on Starbucks. So, I love people, and I like betting on people. So I'm not buying the stock here, but I could probably be talked into it if I pulled up that Chipotle chart and just studied a little bit more Taco Bell. I mean, he's done a fantastic job. He obviously has the ability, and what he's saying is, the corrections that he's talking about echo exactly the negative comments that we're seeing with our data. So, I mean, I'm sure that he's got a lot of the same data that we do when it comes to user complaints, but basically he's zeroed in on what people don't like. And so if he turns that around, I think this company has a good opportunity to move up. And like you said, it might take, 2 years, it might take 5 years, it might take 10, we don't know. But I think they're in the right hands for sure.
Yep, and they got earnings at the end of the month, Landon. So is this one of those wait and see ones, or is it like a long-term type position? If it does pull back, how do you look at that based on your data?
Well, let's definitely do this one again before they report earnings. I want to see how things move between now and then. But if you're willing, if you're a bet on the jockey type person instead of the horse, then yeah, I'm saying buy dips as you see them, as they come in. Wait for dips and buy them. Anything under 100, definitely under 90 for sure. But anything under 100, maybe consider it. We're under there now. But you just got to wait and see. I mean, this is not, if you're betting on nickel, this is not a 6-month trade. He cannot do that no matter how good he is. If you're betting on him, you're going to hold for at least 2 years, probably 5. If you're betting on Starbucks without him, then you're making a mistake. So that's kind of where you're at right now. So if you're buying Starbucks, it's got to be a longer term hold. But the thing is that he's eventually, at some point, assuming he has success over the next few years, he's going to have that quarter where investors all of a sudden realize it, right? It's going to be one of those overnight successes, right? I use that sparingly, but basically it's all of the stuff that he's been working on finally comes to fruition in some quarter in the future. That's the one that people are going to get a big payday on. Which quarter it is, who knows? But if he is successful, it'll be one quarter that just pops out and everybody says, oh, he's doing it again. So that's what you got to look for.
All right. Great stuff. Great data as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder of LikeFolio, joining us. And we've seen that the past couple quarters from LikeFolio on their data. It's been deteriorating.